All right, let's talk about silver, because it just did something that, well, in any normal market, just shouldn't happen. We saw a massive plunge that shook everyone out, and then, boom, it snapped right back to the highs. So today, we're going to dive in and try to decode the message hidden inside all this market chaos. So the big question on everyone's mind is, what is this wild price action really telling us? I mean, you get a double-digit drop in just a couple of days, only to be staring right back at the highs almost immediately. The analysis we're breaking down today suggests this isn't just random noise. It's a message from the market. And frankly, it's a message that has a lot of people scratching their heads.
So here's what we're going to unpack. We're going to look at the real message behind this market whiplash. We'll zero in on the one signal that could be the trigger for a major move, and, maybe most importantly, we're going to explore why the old rulebook for how silver behaves might be completely broken.
Okay, first up, let's focus on that specific moment in time, the whiplash. That violent sell-off followed by an even more violent recovery that got everyone's attention.
What we basically saw was the market punishing the weak hands. That sharp drop was designed to shake out anyone who was on the fence or nervous. And the recovery? It was so fast, so furious, that anyone sitting on the sidelines waiting for a nice, slow, comfortable entry point, well, they just got left in the dust. The key argument here is that this isn't the fluke. It's a signal that the real underlying demand is way stronger than any short-term panic.
And this really speaks to a totally new kind of market environment. This isn't your slow and steady bull market. The corrections are lightning fast. You blink, and you don't just miss a little dip. You miss the entire recovery. It means waiting for that perfect entry becomes a strategy for losing.
So, if the market is this strong, what's powering it? Well, the analysis points to two very different but incredibly powerful engines that are driving the demand for silver. One is monetary, and the other is industrial. Let's see how they work.
So on one side, you have monetary demand, which you can think of as the exit door. This is when people pile into silver as a safe haven and escape from currency risk and instability. This demand can just appear, like someone flipping a switch when confidence starts to wobble. Then, on the other side, you have industrial demand, the unstoppable need. Silver is absolutely essential for things like tech, solar panels, and the whole electrification movement. These buyers aren't speculating, they have deadlines, and they are not sensitive to price. They have to buy. And when these two forces sync up at the same time, that's when you can get a really powerful squeeze. But there's another piece to this puzzle. A key indicator that, historically, has shown up right before some of silver's most explosive moves. And it has everything to do with its relationship with gold. Now, this is a crucial point. While most people are just watching the price of silver, the source material argues that the real signal is when silver starts to consistently outperform gold. When that happens, it suggests the entire psychology of the market is shifting. It's moving from conservative play defense mode with gold to an aggressive play offense mode, which always favors the more volatile metal, silver.
And I love this quote from the source material because it just nails the dynamic perfectly. Gold is the big, stable, heavyweight champion. Silver, well, silver is the faster, more aggressive lightweight with a knife. And when that lightweight starts winning the race, it signals the entire fight is about to change.
And when that playbook breaks, when a market finally escapes a pattern that's held it down for years, the old analytical tools can become worse than useless. They can become dangerous. We may be entering a totally new market reality.
Think about it. For years, silver has been stuck in a range, creating this powerful psychological resistance level, an old ceiling. A lot of analysts have stared at that ceiling for so long that they treat it like a law of physics, assuming the price has to fall back down, or that it just can't go much higher.
But here's the critical shift in thinking presented in the analysis. Once that multi-year ceiling is definitively broken and held, it doesn't just disappear. It transforms. That old resistance, that wall that held the price down for so long, becomes the new foundation of support. It becomes the new floor from which the next major move can launch.
So, for a true repricing event to happen, we're talking a fundamental shift, not just a rally. The source identifies three key ingredients. First, you need a long, quiet, boring period that suddenly ends with a violent, almost unfair expansion and volatility. Second, you need big money buyers stepping into a market where supply is already tight, causing huge splashes. And third, the whole story changes. People stop trading silver day to day and start holding it as long-term insurance, which just sucks even more supply off the market.
So, with all that in mind,
How in the world do you navigate a market that's behaving this abnormally? The answer has less to do with charts and more to do with your own psychological framework.
In a fast cycle like this, the analysis really boils it down to two mindsets. On one side, you have the person waiting for perfection, hoping for that perfect, slow, calm entry that, let's be honest, almost never arrives. That just leads to being left behind. The other mindset is about rewarding preparation. Here, the edge doesn't come from timing things perfectly. It comes from understanding the phase the market is in and getting positioned before the crowd shows up.
And what happens when the crowd finally does arrive? Well, the final phase of a massive move isn't fueled by logic or fundamentals. It's fueled by raw, powerful human emotion. You've got regret from all the people who sold way too early. You have the intense fear of missing out, good old FOMO. And then there's the sheer pain of being left on the sidelines watching it run. That emotional cocktail is the rocket fuel for the most extreme vertical moves.
And this is a direct and really important warning from the analysis. When volatility gets this high, the market will mess with your head. It will bully you. A big green candle makes you feel like a genius. A sudden red one makes you feel like a total idiot. If you let your self-worth get tied to that emotional roller coaster, you are almost guaranteed to get shaken out of the very move you were trying to catch.
Which, of course, leaves us with the ultimate question. When you look at the evidence, the structural shift, the twin engines of demand, the potential break in its relationship with gold, is what we're seeing just another temporary rally? Or could this be the beginning of a fundamental repricing that rewrites the rules for silver for years to come? Well, the evidence suggests we are all about to find out.